everybody. 2024 is over, and here we go with 2025. New year. I think same or similar are going to be investing goals for me. I want to discuss that in this video. But 2024, I think overall was like a pretty good year. Hopefully, everyone else had a decent year as well. Regardless of how your 2024 was, let's make it great in 2025. And what better way to at least start this year with either reminding oneself or starting in a different either personal finance or like investing strategy or mindset if you don't already have things implemented in your life. I don't know obviously what's best for you, but maybe I don't even know what's best for me. But in videos like this, we're going to discuss some things that I'm doing in my personal life that I think are beneficial. But I'm going to do some self-reflecting a little bit in this video too, but most importantly, going to lay out kind of like a foundation or groundwork on my plan in 2025. It's going to be quite similar as to 2024, as I think, in my opinion, I've already been implementing things that I think have been working, at least in my life. Again, I'm not a professional, not a millionaire, but yeah, I'm just doing what I think is best. So again, this might not be the best for you, but this is my approach. So let's see, let's do goals. 2025 goals. What better way to do this than to put it in writing? One of my goals is to where'd that 5 come from? Okay, let's just start a new page. What a great way to start the video. I was just gonna say how I've been trying to improve my handwriting. 2025, I think it's coming out okay. Let's zoom in a tad bit. 2025, I guess I should have put goals too. Goals. That's a bad S. Let's see, nice. So, I'm gonna start the, conversation with, my goal, and within the next, let's say, 2 to 5 years, I don't really even know, probably 2 to 3 maybe, is hopefully purchase a house. So, and I'm in my like late 20s now. That's kind of sad maybe, but maybe not in a sense. It's also good. So, I need to ensure that I'm gonna have a decent amount of money available for a down payment, fees, and all of the other shenanigans that come with purchasing a home. Again, that is a big goal of mine. So okay, yeah, I guess I should put this because this is important. I guess purchase home. Let's see, purchase house. But I'm gonna put this to like 1 to 4 years, as this is probably definitely not gonna happen within the next year, but maybe 2 years when my lease expires, because they do 18 months where I am. So this is definitely just influences a lot of my personal finance, or I guess investing decisions, as I want to ensure I'm kind of minimizing risk. In case some bad things happen, I can at least have some access to that capital. As a note too, I'm only including money that I get. So like I have like with work or whatever, we have our own separate like fund or whatever, but I don't have like control necessarily over that. So this is just like my own personal money. Anyway, let's get into like monthly. I still want to try and save like $1,000 a month, and this month, and this is gonna go to save and investing. And again, this is like outside of like work. This is like me. It's probably wise, where like half of this goes to saving, half goes investing. And I guess when I say saving, I mean like high yield savings accounts and bonds, I guess, in a sense. Because like, sure, it like a bond is a form of investment, and I guess we're talking mostly like short bonds, I guess. And when I say invest, I mean stocks, ETFs. I mean, there's obviously other investments, but I'm just working with those. So when I say savings, high yield savings is, I actually would not call that an investment, but it's a vehicle to have quick access to cash while still in this current market gaining some additional interest on your money at almost risk-free. And nothing is 100% risk-free, but this is essentially like zero risk, essentially. The high yield bonds, or not high yield bonds, like short-term treasury bills or notes from like the US government is mostly what I'm gonna be talking about with these bonds. That is essentially like zero risk. Again, it's never zero, there's always risks, but the risk is low. So when I say save, I kind of mean these two as, I think the likelihood of my money depreciating with these is very low. Now, some people are gonna say, "Well, inflation, blah 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 blah." Inflation affects every asset class, everything. So I decide to not really factor it into my equation, as it pretty much affects everything. Maybe that's dumb, maybe it's not, but that's just something that I've been kind of thinking about. Where, yeah, that's a whole different conversation. I don't know. We're not gonna worry about inflation in this video. So $1,000 a month is what I'm trying to put down, at a minimum. So a month minimum. As this is sometimes hard some months because the next month I got my car insurance. That's expensive. Like that's crazy. So it might be hard next month, but we're gonna do a goal. I was able to kind of do this last year too, so I should be able to do something like that, similar. But yeah, okay. So $1,000 a month to save, invest. Maybe we do like each month a 50-50 split, stocks, or it depends what the market's offering too. Like the thing with these, what do you call it? Like plans or goal? I guess plan, goal, whatever you want to call it. I guess I want to do that too. Plan. Is at the market's constantly fluctuating. Things happen in people's lives. You're going to pay for stuff. Just things happen. So you got to be kind of fluid and adaptable. Right now the market is actually, I would say the market pulled back a little bit for some of the stocks, and it seems to be like an okay buying opportunity for me, at least in the things I'm looking at. Bonds are depreciating a little bit. The yield is going down, so that means the high yield savings are going down as well. If money starts rotating more out of bonds and high yield savings, out of bonds, and high yield savings is getting lower, well, people are going to be more enticed to go into stocks and ETFs, because just like that risk reward is more promising. So right now everything seems to be actually kind of falling a little bit, not a lot, but a little bit. So like as of right now, I mean, I'm actually recording this on like New Year's Day or New Year's Eve actually. I like some stocks and ETFs as of right now. Like a few weeks ago, I was more like bonds and keeping the high yield savings, but because things have dropped a little bit, it's like, okay, something's looking kind of good. So again, this $1,000 a month is going to be constantly fluctuating between saving and investing, bonds or stocks. Depends what the market's offering, my risk for appetite, and what I want. But in general, it's going to be kind of 50-50 in a sense. Let's see what else. And again, this is like the ultimate goal I'm working towards. But yeah, I want to. I'm shorten this. I want to stop spending money on things that I don't need, and I really don't spend a lot of money on things I don't need to begin with. But there's some things I look back and I'm like, why'd I buy that? So I just stop spending money on dumb things. I don't know how to say dumb things. I mean, so the things that come to my mind right now are, I was working on a website like a year ago that was like almost $300 to get everything. Maybe a year and a half ago, I bought FL Studio. It's like a music editing software. That was like $200, and like the thing is like, they're not like bad things in a sense, because like I want to experiment. I want to like broaden my horizons in a sense with certain things. I want to test some things out, but at the same time, it's like those are pretty somewhat expensive items, and it's like, did I need to do that? Like, I think if I like the music editing software, I thought a lot about that, and I want to try it out. Now I do have it for like life, so that is one thing. Like, I can always use it. The website though, that's gonna be kind of a recurring cost if I want to keep like doing that. I probably should have thought a little bit more about the website, but just things like that, where it's like, you just buy some things and it's like, if I thought about it maybe for like another 5-10 hours, like maybe I didn't need it. Even like 3D printing, I kind of want to get into that, but then I look at the machine, I look at all this price, the costs. It's like, I'm like $1,000, and it could be cool. It could increase, my income too if I'm able to sell things. But then it's like, you really got, or at least for me, I need to like have like a structured plan, foundation of things before I buy one of those things. Like I say, 3D printing, I need to know exactly what I'm gonna do with it, why I'm doing it, and how I'm gonna like accomplish my goals, or make that thing valuable over the next few months. As if I don't do it, then I just don't use it. So I just got, or if I do spend more time researching, maybe is a good way to put it. Let's see what else. So actually, we can talk about this a lot, but I don't want to get too into detail with that. I think, yeah, impulsive buys. Stop with the impulsive buying. It's hard to. There's sometimes where things seem impulsive, but it's not. You've been thinking about it for a while, and you think it's the right decision. Sometimes some things, you gotta have some fun too. You make money. Or at least I make some money. You gotta spend some things on things that are actually fun, enjoyable, and make it worthwhile. Because like at the end of the day, like, then what's the point, But I think you gotta have self-control, and you gotta know when to not buy things. I do want to let's go back to this conversation. What I want to go here. I want to break down. Yeah. So stocks. Or let's break this down. The stocks and ETFs. Stocks. This is kind of like a big one. ETFs. I'm still sticking with my similar goals as if I'm buying a stock. I am breaking my rules every now and then, but again, it's like maybe 1 to 5, not even 5, maybe 1 to 3% of the portfolio in any individual decision with those trades. But for the most part, dividend yielding. If it's a stock, dividend yielding, cash flow, they get a lot of cash flow, and healthy balance sheet. If it's a stock, I do have. These are hard to find, and I don't really do a whole bunch more of researching. Where is it? I still got all my criteria of things that I need to stay focused on, but essentially make sure the company's healthy in the balance sheet, they don't got too much debt. Make sure their cash flow, they are generating enough free cash flow that, like, it's it's healthy for the business. They can invest back into the business, and then if they are paying a dividend, it's a reasonable percentage of that cash flow. They can pay it. They're not taking additional debt to pay the dividend. Except there's like one situation where that is acceptable. Maybe not acceptable, but I saw it as somewhat acceptable. That's maybe a different video, but just it's a healthy company. Right now, there's like probably 2, 3, maybe 4 companies that I'm looking at that actually fit this criteria. If anyone else has like any other ideas, let me know. But like they're pretty hard to find. And yeah, watch my the other videos if you guys want to go more into detail on that. But again, those aren't investment tips. They're just things that I'm looking at and why. Because by the time anyone was watching this video, this might change on what I'm looking at. I need to increase percentage of ETFs in the portfolio. Right now, I think it's like, actually, I did increase it a lot though. Let me see, 1 second. 16% is SCHD and about 1% is VYM, so about 17% of the portfolio. I would like that to be at least 25 to 30%, as I think ETFs are just quite solid. Actually, yeah. So the two dividends ETFs I'm focusing on are. Sorry, the 2 ETFs I'm focusing on focus on dividends and are not really for growth. I'm so hesitant to buy these growth ETFs, or even things like VTI or even the SPY or QQQ, just because all those ETFs have the same assets in them. They just buy the Google, Microsoft, Apple, and Nvidia, Amazon. Like, I don't know how to explain this, but it seems so propped up and expensive. Like all these ETFs, all these, everyone's buying those like 5 stocks, and that makes up such a very large percentage of the SPY or the QQQ, whatever, the larger ETFs, or the indexes, I guess is a better way to say it. I want to invest in some of that like growth, but I guess I need to find a better asset class or vehicle that disregards those top like 5 to 10 stocks or companies, because I think they're just so expensive. I think there's value in the market, but not in those. I mean, Apple's like, was it $3 or $4 trillion? That's insane. I don't think people know how expensive that is. And again, maybe, that I don't want to keep, I feel like I want to focus the video on the goals and stuff, but we can't ignore the fact, we can't ignore what the market currently has. Yeah, or the market is currently valuing certain companies and stocks, because that affects kind of our goals. Like, if people blindly invest in, like any growth ETF, yeah, like, I guess you always see this graph. This is the graph you see. You see, the market goes like this, and then sometimes you go by here, you don't really know. But like, I don't know. It just seems like let me draw a graph. It seems like we're like this, and like I feel like we're gonna be like this, like, and maybe this is like a small blip in like this, like, and yeah, but man, it's expensive. When I look at those numbers and those ratios, I just can't make sense of it. So I don't invest in things I don't really understand, yeah. Anyway, I'm gonna disregard. Not disregard. We're gonna get back to this, but It's expensive. So ETFs I want to focus on. Dividend ones. The what's the word? Like low beta. Yeah, I guess we'll say low beta. Mostly it's a low beta, in case you guys don't know. Like a beta of 1 means whatever the market does. Like let's say it goes up 1%, that ETF or that stock goes up 1%. Let's say if a beta of like 0.5, let's say the market goes up 1%, that stock goes up 0.5%. But it's same inversely, if the market goes down 1%, that goes down 0.5%. Just it's like how volatile that stock or ETF is relative to the market. I like dividend low beta stuff because it's like more cash flow based, and in my head it just makes more sense. What do you call it? I just lost my train of thought. A dividend and low beta investing in value, it makes more sense because it's more predictable in a sense. So it's predictable in an unpredictable market, and I understand there's that relatively the predictability of this of a stock or ETF like this is higher than something that doesn't pay a dividend, and especially when the market is like running up this high and this much. I want my money more here because I think I'm, at least from a lot of knowledge that I've heard on the internet and people's experiences, most of the time people make money in the markets and make money here and there, blah 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 blah. But minimizing, I guess let's just write this down, it's important. I did not spell it right. Minimizing risk. I think that again that's what a huge thing is about. It's not about maximizing gains, it's about minimizing risk. And when I see this, I see that as minimizing, or see asset classes like this, I see that as minimizing risk, as these growth ETFs that focus very heavily in the technology space. You could probably maximize your rewards. I just don't want to be caught in like that headwind down, or that, and I'm not gonna say it's coming because I was thinking that for a while. It has to, everything could happen, or nothing ever has to happen, whatever, but if the market was valuing certain asset classes and stocks not fairly, but I think reasonably, in a manner that I can agree with, I would buy those growth ETFs. The things that I'm looking at right now, I can't. I just can't. So that's why I'm doing this. I think one of these things is growth ETFs. I want us to keep an eye on them. Growth ETFs. Keep on watch. I think there could be buying opportunities eventually. So we'll see. I think another goal too is the stocks ETFs. How do I do this? And let's draw a line here. Let's sell or reduce exposure. On other stocks, I don't know. I'll say bad. Right now I have some things in my portfolio that I would say not in love with. I think Intel comes to mind right now, Verizon, probably the big ones. I don't know how to feel about Intel because it just keeps getting, yeah. That's a whole conversation in itself. Verizon, they have too much debt. So getting back to my principles, their balance sheet is trash. They got way too much debt, so I would like to get out of that. And I've been saying that for like probably 6 months to a year by now. As rates decrease, I think, at least from my understanding, companies that have a lot of debt are I guess a better way to put it, when interest rates increase, companies with a lot of debt become more risky, and they will produce less money if they have to take on additional or refinance, I guess, their debt at those higher rates. So that makes them less attractive. I think rates are either going to stay quite stagnant or decrease, which is going to make these companies like Verizon or heavily indebted companies, I think that the market will value them a little bit higher as to what they are right now. So Verizon's down like 20% right now from where I bought it. I think it's okay. I don't love it, but I don't dislike it. That's another thing too. You gotta keep an eye on the rates. Yeah, I mean, you can't really predict it, but it does. It influences everything. If rates do go down, I think stock buying will increase again because we're getting back to the bonds are going to be yielding less, which makes the high yield savings yield a little bit less, and it makes just buying these less attractive, and the risk reward is less or potentially less in some people's eyes or perspectives than buying a stock or an ETF. Any other money goal? I feel like is that really all my money goals? I guess a big one too is I mean, I have a couple of YouTube channels, this one including, but I want to increase. Or is it like a money goal though? Not really. I want to keep working a lot on the YouTube stuff. But I guess it's not necessarily a money goal. I'm just looking at all my spreadsheets. I can't save in rent, or we can do a little bit utilities, but it's not like that much. There really isn't a lot I can do for the. I don't want to say that, but there's not a lot I can do. I think actually, this is on the previous page. We discussed this in a previous video. Actually, the last video. Yeah, there's not too much I can do with my rent and like essentials in a sense. The fun I already don't do. I'm not gonna say the fun stuff. Like I do fun stuff, but there's like this is like $100 a month, maybe 200, like at most. Actually, let me go back to my sheet. Some months are expensive, but it's usually because I'm doing like a gift or something. Yeah, I mean, I guess I could always increase. Yeah. A couple $100 a month in fun, like even like $100 a week. If you go out one night with like a significant other or friends, you can easily spend like $100 just like go watch. I guess not 100, but like if you want to go see a movie, it's like $30. It's like $15-20 for the ticket and like whatever. Yeah, I'm just saying, going out is expensive. I can probably decrease this a very little bit, but at that point, I feel like I'm sacrificing a lot of. Maybe not a lot, but there's definitely sacrifices there. Maybe I can decrease a little bit of fun. Save and investing, the rent essentials in this, I would say, is pretty consistent, and there isn't too much I can change. I'm keeping this at the minimum of what I have, but I would like to increase more. I would like to keep the fun where I have it now because I think it's sustainable. Anything lower, I think it hurts some friendships and significant other and family and stuff like that. Just again, like my family's all out of town too, so I gotta drive pretty far, and I factored that fun into this. I guess it's a whole different conversation, but of what I consider fun, it's something that I don't need as like rent or anything. It's not essential, and I have to do it, like or whatever, like gas. I consider essential because I need to go to and from work, I need to go to and from places. But if I'm going like to friends' houses or whatever, I guess I might have just contradicted myself. Anyway, though, I guess a better way to put it would be like tolls. Tolls are pretty expensive. Like just going to see family could be like $20-30 in tolls. But yeah, I would like to increase this by either working more at home. Sorry, not home. At the job, or increase YouTube, like pumping more video this percentage of it, I'm able to invest and save and feeling better about the fun and such. I guess let's make this a goal. Fun. I wouldn't say decrease. Don't decrease. Decrease. But make most valuable, I think is the best way to put it. Or like efficient or something, you know? Like we all need to have fun. We need to keep our friendships and stuff, but maybe some things don't, like I say, don't need to be spent on, but I think, so I guess a good example is like my one friend wanted to like me to ski, and I'm just kind of like, this is expensive, it's time consuming, it's all this other stuff, but we take that money and do something else, maybe, and it's a lot less money, and I think I think that was a good conversation we had. Anyway, I'm just, again, I didn't plan what I'm going to say in this video. I mean, I guess I did a little bit, but it's also self-reflecting. Yeah. Any other goals? I'd say not really. I mean, it seems pretty basic, and that's because I'd say it kind of is. I got the money. I'm trying to. I already have my things planned out. Like, I guess in the previous video, actually, that's a perfect segue. This video, last one, into this one. I got like my layout of things that I think is sustainable, and what's the word I want to use? Sustainable, consistent, but like I guess optimal for fun, happiness, and I guess longevity of my own personal finances. I have things I need to do to, I think, better increase all that. But it's not like it's not like it's impacting my life at the current moment. These goals are going to ensure that I'm being consistent in all of that. But working towards the biggest goal right now is probably the house. But then also, yeah, ensuring that I minimize my risk. I think that's huge. Huge. And again, I know you can make more money potentially in these growth ETFs and whatever. We could ramble about that for like another hour or two, but I don't see it. Not what the market's currently valuing these things at. Anyway, though, hopefully you enjoyed the video. Let me know like 1 to like 3 of your personal finance goals in the description below. Would be kind of nice or cool maybe to see it in a year from now if you guys still follow the channel. Anyway, though, take care. Hopefully you enjoyed the video. Stay tuned for some more.